Hey, Adam Hooksma here from ProjectionHub, and in this video, I'm going to be walking you through our tow truck financial projection template for a tow truck business. And I'm going to be walking you through kind of step-by-step how we built out these projections, how you can fill it out for your own business. And so this is built and set up well for folks that are looking to get an SBA loan or raise capital from investors. And we're going to kind of walk you through step-by-step. So my background, I was an SBA lender for 12 years. I closed about 1,500 SBA loans, and now I own ProjectionHub, and that's what we do. We help folks through the process of creating projections and business plans and ultimately walking through the SBA loan process. And so today we're focused on this tow truck business projection template. I'll put a link in the description of the video below so you can grab the template and follow along as well. So with that, let me go ahead and kind of show you around. So first we've got this at a glance tab, and this is just a high level kind of graphs and charts and tables and key performance indicators. One thing that you'll want to know if you are looking for a loan, particularly an SBA loan, they're going to be looking at your debt service coverage ratio. And they're going to want that to be, once you get to a kind of a stabilized position after the initial startup phase, they're going to want you to be at a 1.25 or above, meaning you have $1.25 of earnings or cash flow or profit for every dollar of loan payments. So that's the way, a lender will typically look at that. And so some lenders will want you to have cash flow right away in year one. What we often say is like, hey, look, you're just starting out. You're probably, if you break even or have a small loss in the first year as you're building up and ramping up your business, that's probably to be expected. But I do just want to let you know, like you might, depending on the lender you go to, they may say, hey, we really want this to be positive right away. So anyway, if you have questions about an SBA loan, we do offer a free SBA review. I'll put a link in the description of the video below to that free SBA review as well, so you can take advantage of that. And I can give you some feedback and thoughts on how I think the deal looks based on, my work over 12 years and closing over 1,500 loans. So, okay, you're going to look at here. The second green tab is our income statement summary with a 5-year income statement and then a 5-year cash flow statement, 5-year balance sheet, and then your income statement, cash flow, and balance sheet broken down by month for each of the 5 years. You also will have this input assumptions tab. Okay, so the blue tabs now are your input tabs where you have to input all of your various assumptions, revenue and expenses, and startup costs to be able to produce those projections. So we're going to assume this is a startup. We're going to assume you're going to put in $4,000 as kind of a down payment. Accounts receivable here, this just means you're going to get paid within 10 days of providing the service. Accounts payable, you're paying your bills within 10 days. Here's the fixed assets or equipment. So we're assuming $10,000 for a trailer. We've got loan closing costs of $1,600. We've got a couple of trucks here. And this example, we're saying, hey, let's say we already have one truck. We're looking to purchase another truck. We're going to finance some of that with some truck financing, but we also need some working capital. And so we want this SBA loan here for working capital and maybe also to cover that trailer, payroll, that sort of thing. Okay, so you're kind of piecing together some different financing here. And then on the revenue side, what we do is we let you set up by month what's the average number of jobs per day that you think you'll do per month. And then you can set an annual growth rate. So it'll increase, in the following January, it'll be 2.25 jobs per day plus an extra 15%. And then you can set a maximum number of jobs per day that you think you'd be able to do here. And then here's kind of the breakdown of the different services. So you can have a different price point for different services. The average number of miles you think you'll be driving per job. So this really depends on if you're in like a rural area or in the city. That's probably could differ like very substantially. And then the number of services per job. So if we're saying here's the estimated jobs per month, basically this 0.45 means that 45% of these jobs here are a light duty tow, 25% are medium duty tow, and so on. And these are kind of like your upcharges for additional miles. When we're saying like 5% are going to pay extra for additional miles. 5% are going to pay for after hours or weekend surcharge. And then we've got our variable costs where you can set a per mile cost. So your fuel costs, maintenance and tire costs on your trucks on a per mile basis. And then we've got a couple drivers here, paying them $150 a day plus some taxes and benefits. And that's really it on the revenue and cost of goods sold. So then moving over to our operating expenses, we've just got some basic operating expenses like payment processing fees. So if you're taking credit card, charging people's credit card, they're going to have a payment processing fee of 3% roughly. We've got advertising and insurance costs, permit inspection, dispatch software. So you can always add in more rows. So you can just come in here, right click insert, and then you can add as many expense line items as you want. And then for salary, we just left this blank, but you could, pay yourself a salary. We've already got the drivers on the input revenue tab, right? We were paying the drivers here $150 a day. If you're going to pay yourself a salary, you can set that here. You can also set what month that salary is going to start. So for example, let's say you wanted to start paying yourself 30 grand, but you're not going to do it until month 37. So year 4, you're ramped up enough at that point you think you can afford it, right? So we could take a look at how that kind of looks here. So you can see between year 3 and year 4, because you're paying yourself a salary, your net income actually goes down, right? So you can kind of see how that impacts things. So I'm gonna go ahead and just zero this out for the sake of this project, but that would allow you to kind of play around with that and say, okay, based on all of my assumptions, when can I afford to pay myself and how much? Okay, so that brings us back to where we started. I hope that's been helpful. If you have any questions, feel free to reach out to us at support@ProjectionHub.com. We can help you fill this out. We can help you customize it, or even just give you feedback and review it once you have filled it out on your own. All right, thanks.